Hi, I'm Dan with Pay Down Debt Solutions. Welcome to our channel. This isn't clickbait. I'll give you guys that warning in advance. This isn't where I put up there, hey, it's velocity banking, watch out, watch out. And I go, look, and I go, no, it's great. Velocity banking is great and it does work. The warning is, do not attempt this on your own until you watch this video. True. Because if you don't, we see as many people fail on their own doing velocity banking because of what I'm about to show you, as we do people just can't stick to their budget and fail at it. And they just keep increasing their debt. So what we're going to look at is, it's hard to do a time lapse on a dry erase board. But this is your checking account. You get weekly paychecks. So this is the last paycheck of the previous month. Right? And then this month, 4 Fridays. August has got 5 Fridays. I don't know about you. I still kind of map. As soon as I realize what months have 5 Fridays, I can't forget them because all those years doing weekly and bi-weekly paychecks and those extra paycheck months are the best. So in this example, total income is $8,000. Total expense is $8,000. Nice big salary. Take home, 0 cash flow. Non-chargeables of $5,000. Chargeables of $3,000. Inside those non-chargeables, I know I'm stepping off screen a little, is a $1,000 payment. So our available income, which is what goes on to that debt destroyer, in this case it's a credit card, is total income minus non-chargeables. But it's not your entire non-chargeables. It's your non-chargeables after you take out the payment for your debt destroyer. So remember, that's satisfied by the money you keep putting on it, your available income, right? It's just like making a payment on it. But it's satisfied because now you don't have money here in your checking and you're sending a check. You're putting your money on it and then paying bills out of it. That's, as anyone doing research or the first time you're seeing it, that is what makes velocity banking work, this method. But this is what I'm going to show you is what you got to be careful of. We know it's easy. Total income $8,000, non-chargeables $5,000 minus the payments $4,000. So our available income's $4,000 for the month, because we have to do this off a monthly scale. That's what all the bills are due. So $8,000, every check he gets $2,000 bucks, right? So he's got $2,000 getting deposited to his checking account. Now, because we have to estimate it for people, you know, looking forward, look out in advance, and every person's got so many different bills and due on different days, and there's just infinite variability. So we got to break it down, something we can manage, something we can understand, something we can put a plan together for you guys. So when we present it, we go, hey, $8,000 total income, total expenses, boom, 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 available, put $4,000 on your credit card every month. You're available to pay your chargeable expenses out $3,000, you're great. You are, and it will work. Implementing it on your own, this is what you got to know. This, right? I don't want to set it up too much, but I want you to know this is the point where you got to pay attention. So from your previous paycheck, the previous month, say you had some chargeable expenses, right? Let's call them incremental, no regular bills. So it doesn't matter. But let's say you just came off a 5 Friday month. You got that full $2,000. The bills are covered. So between this bill, you've got 2 chargeable expenses, $800, $500. And I'm not doing the example like, oh, it's this and that. It's irrelevant. Between these two. So you just got this $2,000 sitting in your checking from that paycheck. You got to go another week to your next $2,000. You got $1,300 in bills before that next paycheck. So you cannot take $1,000 of this and put it on your debt destroyer, because that would be the logical thing. Now, 5 paychecks. This one's the previous month, right? Well, that's obvious from 1,000, 1,000, 1,000, 1,000. Well, you're at 0 cash flow. You don't have that flexibility. You've got to be careful. So you got $2,000 in your checking. You got $1,300 in bills. You put 1,000. I'll say it again. You put $1,000. You can't pay those. You're $300 short. So you have to do a little bit of calculation. Now you're like, well, I already did this. Even if you don't think it, you may feel it. You start to get frustrated. You may even get overwhelmed because it requires so much effort on your part to map out every dollar you're spending in and out, to average the variable expenses like gas and groceries or dining out over a 3 to 6 month period. Minimum 3. We recommend 6, especially, I always say in the northern climates, because Michigan, our spending habits change so much when it's winter. I guess it would be like that in Florida. I don't know. It's like nice weather year round. I can only dream, right? So you probably are already seeing this take shape. You got $1,300 in non-chargeables. So out of that, once that 2,000 hit, you can only put 700 into your checking. 1,300's got to pay those. Then your next checking comes due, $2,000. Your chargeables are taken care of by your credit card, right? And you got to put your available income, but you got to stick to the plan, because I'm not going to draw it so all the bills equal out all that. I just got to show you where to watch out. So you're going here, here, and here, and so you got, bill 1, bill 2, bill 3, bill 4. And obviously, you got other bills, you got other incidentals, small, I bought a pop at the store. That's all getting paid out of your credit card. That doesn't have to come into this calculation. This calculation is what money do you move and when do you move it from your checking to your credit card, and when you make your next, balance transfer or chunk down on a mortgage or a loan or something like that. So here, let's say these are all chargeable. Chargeable. That's easy. It's your next paycheck. You take that full 2,000. Put 2,000 on it. Full 2,000, because these bills get paid out of here. Right? But then it comes again. Now you got 600, right? Say 700, say 150. So what's that? 1,450. Now you got 1,450, and these are all non-chargeables from after you get this paycheck to your next paycheck. So what are you going to do? 2,000 total income. So we showed you at the month. You got to do it on the week, right? This is the step. They don't tell you this step. Like I said, please send me links. If they do a better job explaining it, I'll use their explanation so you guys understand it better. I will explain as many times and as many ways as it takes till you're bored by it because you got it down so much. Because if you can get to that point, you're going to breeze through this. And again, on your couch with your phone in your hand, that's the best part. We're going to do it all truly relaxing. So what do you got? 1,450 in non-chargeables. Well, now you know. Till your next paycheck, you got to be careful. You got to hold those non-chargeables back for that pay period, that week. So only 550 goes in. Now let's say here, you got zero bills. Oh, the next one, which would be this check, right? You got 1,300 due again. So now I'm nowhere near right on the bills. All right, I didn't even add up those bills. It doesn't matter. But let's say you got zero, right? Let's say, let's just say those medical bills, one-time medical bills or insurance payments you couldn't do. You couldn't pay. Whatever, doesn't matter. So, 550 went on. Now what are we up to? 2,700, 550. Ooh, let me think. $3,250. We got zero. It's not yippee 2,000. No. You stop at your available income. That is your max. Right? And I'm going to make it work, but it will work for you because you're working off of your plan. I'm working off of an example. Right? So no. So here, you can only do 750. And it seems like it flies in the face of everything we tell you. You don't want money sitting in your bank account. You want to pay your debt. Yeah, but you got the whole point of paying down your debt using velocity banking is to reduce the interest, save on interest, pay the principal on, while still paying your bills. So there are, concessions that have to be made because you can't do it. And in this example, it would be simple. You can only do 750. Why? Because this last lump sum, what do we got? I said 700, 1,450, 2,150, 4,000 in non-chargeables. So let's say it's 2,250. 2,250, right? So then you got non-chargeable here, 2,250. Right? I didn't say what those were, so it's your mortgage. Make it easy. There's your mortgage. Oh, wait a minute. Oh, that's what I kept behind. 2,250. Perfect, covered. You went back to zero. There's your next checking. This is half of the critical. It's all timing. All the criticality, everything I'm talking about is timing. So you can't just do 1,000, 1,000, 1,000, 1,000. Like, oh, look how easy it is. Heck, I'll just set up auto pay. Weekly auto pay, $1,000. If you get rolling, I say maybe. There is no maybe. What if you buy Well, if you drive to your mom's 4 hours away and you need another tank of gas at $100, it's going to gum up all the work. So you got to be very, very careful with that. You know, doing auto pay to your credit card in lump sums is because there's variable spending, right? We averaged it. So it's going to go up and down. But remember, you only got to do it once a week. Friday or Saturday, if you're having too much fun because you're young, Saturday morning recovery, sitting on the couch, pull your phone out. What non-chargeables do I have? If you had to write your spreadsheet out, take a picture of it with your phone. If you can't, if you don't have the spreadsheet in your phone, so you can just quickly reference, go non-chargeables before my next paycheck. What do they equal? Boom, I move this money over. Same again, next billing period, you do it once. Boom, I move this money over. Boom, I move this money over. Because you only want to keep in your checking the amount of non-chargeables you have to your next paycheck. And if you got 0 weeks, then you stop at what your available income for the month was. You don't want to exceed that because you don't want to go, well, I start out monthly, that's not good enough. I go down to weekly, but then weekly you completely ignore, well, I still got to pay attention to what's coming. Still got to pay attention. Here's the other part of the critical timing. You got this debt destroyer. Say you got $10,000 limit on it, right? You got this sucker down to 0. And you're ready to make another chunk payment, whether you got to do something like do a charge to PayPal with a charge, your credit card company, that's a cash advance fee. But you got to do like a charge to PayPal and get PayPal to send a check. I know they did $1.50. I don't know all the details and states and countries and everything. There's alternative ways to pay a credit card with a credit card. Plastique, you can't even do it. There's ways, legal ways, protected ways, like using a known service like PayPal. You guys can find those on your own. But let's say you're at 0, you're ready for the next payment. Whoa, the timing. This is why they just fail and they can't figure out. This next part, people will struggle with. They don't know how they got into the trap. But it's a timing thing because you can't teach someone the timing because their bills are so variable. But you can learn how to time it based on this. So you got that $10,000, you're at 0. You got 10,000. Let's say you just came off this. You've got these bills. Now I left them out, but you're going to have some chargeable expenses in here. Right? Groceries, gas for that week. And, 3,000 divided by 4, $750 a week. Right? So you can say that's $750. So now the money movement stays the same, right? Because that gets paid right here. Credit card pays that. So you worry, still, same thing. You take the non-chargeables out. You keep those in your checking. You take that out of the balance. Hold it, the non-chargeables till the next checking. You move the cash in, $700. You're still paying those chargeables. When do you do that transfer? Because what you got to be careful of, and this has happened to at least 4 or 5 people, is they'll not get the timing right. They will have 0 in their checking. Their credit card will be, now remember, if they have 10 credit cards, they're going after their biggest payment. That's their first one, or debt destroyer. Let's say they're all maxed. So they got every credit card maxed. They max their debt destroyer. They have nothing in the checking and bills due before the next paycheck. The whole system just collapsed. And if you didn't understand how you got into that, that means velocity banking is a sham. It must only work on the board and it just looks good on, TV, looks good on your phone. No, it's because no one emphasized how critical the timing was. No one explained to you to pay attention to the timing. Now we do the 10,000 limit because I have to pick a number. I can't pick $9,981.16. I don't know when your bills are coming in or when they're going to be due. So I go, it's always the maximum. The idea is the 10,000 max. Well, here's what you got to look at. You don't want to do it here. You can't max your credit card here. You've still got these bills due, right? You just got this check. You had a whole week to go. Here, that is where you pay off your next debt. You want to pay it off after you made any charges, plan charges for the week. You already put, it's Friday, you put this Friday, Monday, Tuesday, you put gas in your car. You know when you're going to put gas in your car. Subtract, well, this one doesn't require subtraction, but you subtracted out your non-chargeables, right? The available went in, you paid your chargeables. So now this is going to be perfectly at zero. Let's say it's $750, right? Because I just said, hey, you had chargeables. You took it to zero, but you had chargeables. So you got $750. That got paid out, you know, the cash you kept in your checking. And right here, you're going to do your balance transfer. Right there. So obviously it can't be $10,000. It'll be $9,250, but don't forget any fees. Fees that the credit card company puts on you, not you pay, you know, oh, we want to balance, you know, you want to transfer $10,000? Great. We'll transfer that and mail us a check for the $300 transfer fee. No, not like that. It's going to all be in there. So you got to take that into account. I'll say plus fees, just as a reminder for people. Plus fees. What's left is what you are, the chunk you're going to make. The payment you're going to make on your next card, on your mortgage, on your line of credit, on your car loan. Whatever it is. This is the point. You paid your bills for the period between the two checks, your paychecks. Then you make that payment because now you already know, you already made your payments for that time frame. Your non-chargeables are covered. Your chargeables have already been charged, right, on your credit card. There's your balance transfer. That is why I told Jen, I'm not even going to know what, I can't know what she's going to put on here, but I'm like, warning, warning, warning. They got to know this. On your own, you will get to these points, and 90+% of the time, it seems like this is where people struggle the most. When we do coaching and people are like, hey, I was doing it. I paid some stuff down and I just got stuck. This is what we find. They're getting gummed up in the timing, so they pull back. They're like, whoa, 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 like, oh, my debt's going up. Something's going on here. I'm pulling back. It was working. Why is it not working anymore? Things happen with their bills. Money moves around. All that's relevant. This is where they start to struggle. So when they ask us for coaching, really, like, there's some people, when they only have like one credit card, one more, I'm like, you don't need a whole coaching session. What am I going to talk to you about for 45 minutes? No, move your money here, move it there. Give them the same warning every time. You got to do it on a weekly basis, or it's not even weekly, paycheck to paycheck. Like, I could just take that one out, right? You're getting paid every other week. Still applies. Same thing. Subtract your non-chargeables before your next paycheck. The remainder is your available income going into your debt destroyer. Stop when you reach your monthly available income. You already calculated. Pay your bills. Pay your non-chargeables. Pay your chargeables, right? You're just going through it. When you're ready, when you get that down to zero, and you're ready to make a chunk down, you make that chunk down. See, now I got, look at all these bills that happen between these two. Your chunk down will be there again. After you made your payments, your non-chargeables are covered for that. I'm not calling billing period. That time frame, paycheck to paycheck. Your non-chargeables are covered. You're charged all your credit cards. That now is your available balance to transfer on your debt or on your credit card. You're at zero because now you know you're going to max that sucker out. You're going to have nothing left in your checking account because you just made all those transfers and those payments. Boom, checking comes. Bam, to that check, your purchasing power is back. Provided you got to watch ahead. If this is $2,000 and there's $2,500 in bills coming and they're non-chargeable, you got to account for that. You go through all this, be like, oh, well, hey, I got something more than my paycheck coming. That's it. You just got to make sure that the bills are all paid. You've got enough money in case there's one bigger than your next paycheck, in the next billing period. Not billing period. Time frame between paychecks is covered. And it looks so messy and like all this stuff when you're living it. It's Saturday morning on the couch. Turn your phone on. Paycheck, yep, got my paycheck. Yep, it's the right amount I expected. What non-chargeables do I have to do? This is going to be just your daily as you're paying your balance down in your debt destroyer. Not your daily, your weekly or bi-weekly or once a month. You go, what are my non-chargeables? What's my available income? Non-chargeables in this time frame to my next paycheck. Okay, the remainder, checking account. Sorry, not checking account. Credit card debt destroyer. And then you're like, oh, hey, I got this thing down to zero. Well, which next credit card? You don't have a big plan. You didn't do all the research. Your next biggest payment. You're going to go, all right, boom. How much can I afford to put on that? Well, what are all my bills? And now, see, the reason I say you don't project when you can estimate when you're going to do that big chunk down, but you can't plan it because There's variable spending in here. There's groceries, there's gas with your credit card, there's snacks, there's a dinner or something. That's why you wait and you're like, okay, maybe a Thursday. You paid on Friday, it's a Thursday. Like, all right, Thursday. Get home from work, check's already in your direct deposited, bills are done for the week, you're home. Unless you're going partying that night, right? You're going out to dinner. You got all your bills in, that's when you want to do it. Because that's all you're trying to avoid. You do not want to hit that point where you moved money around, you moved it around too far ahead of time, zero checking, maxed out credit card, all your other cards are maxed, and now you can't pay your next bill. Now you're looking at paycheck advance, like really, really predatory type things. Things that they hurt you so bad on interest. Jen and I discuss it constantly. We're amazed they're even legal. Ugh, that's a video for another time. If this is clear as mud, if you've seen someone else explain how critical the timing is to velocity banking, send me a link. Email us at info@paydowndebtsolutions.com. And Jen wants me to put out a reminder, July 19th, we're doing a workshop. We're limited to 6 people. It'll be $100 per person. You send us your sheets in advance and send them at least 2 weeks, like basically in a week. You're gonna want to send it to us so I can work through them because there's a lot of emails back and forth. I do this every day, so I know all the data I need. And if I was to actually try and put in my head, it'd be like a dictionary of like all the information I need from you. Fill out the sheets, request the sheets. We'll send you the sheets. Fill out the sheets. It might take it back and forth a few times so I understand better context of what you're doing with your money, your goals, as well as like you forgot remaining payments on something or an interest rate does, the payment you say you're making and the interest rate on a credit card, let's say, don't make sense. I can't actually pay you down. Plus, with that workshop for $100, if you still need coaching, we're not double dipping you. The $100 comes off the coaching fee, and then you guys can schedule coaching if you want more help beyond that. Again, I hope this helped. This wasn't clickbait. You have to be aware of this to be successful at velocity banking. If all you keep seeing examples of them telling you how great the numbers are and it works for you, and you get into this and you're not paying attention or you didn't catch this, you will fail. There's no way not to fail. It may not happen the first month. You might even get a credit card paid off just because of how your bills are structured, your chargeables and non-chargeables, but it's risky. I would say make sure you understand this as well as you understand the overall concept. I'm Dan with Pay Down Debt Solutions. Always aligned, never alone. DM us anytime. Email us. Our Facebook group is for existing students, so we avoid trolls. So if you're a student, we'll add you to the group if you'd like. But email, DM you on our YouTube channel. We'll answer any of your questions. We're always here to help.